Hello everyone. So today I'm going to describe what an intraday trader does and who should be an intraday trader. Now this is a chart of the Nifty 50 index. I'm using Zerodha. It has a really good chart platform, kite.zerodha.com. You do chart and it gives you the chart. This is the Nifty 50 index. So you can just see that right now today, this green figure right here, 16,123 on the 3rd of August 2021. This is where Nifty has closed. Now Nifty 50 is the most traded index along with Bank Nifty in the Indian stock market. So you can see this big green candle has reached here and Nifty has closed. Now, what does an intraday trader do? Okay, because during the day, during the market hours, people are constantly buying and selling and trading this using derivatives. They're either buying or selling options or they're buying or selling futures. So let's just go here and let's look at a 15-minute chart. So essentially, this is where Nifty closed yesterday and it has started and opened here. So there is a gap up opening, which we can say. And it continues to go up and up, forming small candles. So the market is trending. Now, what an intraday trader has to do, if you go to an even smaller time frame, the 5-minute chart, the intraday trader has to catch this move, to catch as many candles on the trend as possible. This is very challenging and extremely difficult. If you have the aptitude of catching these candles one by one in the live market, that is when you should become an intraday trader. Today's trade was a little easier because you see the market opens higher, it corrects downwards, and then it goes high up. So here, somewhere here, you would have a breakout trade. You can put your stop loss somewhere here, and you would keep trailing your stop loss with candles. You can even move it to a higher time frame. Okay, now this goes up here, it's constantly going up, and every candle you're moving your stop loss to the low of the one previous candle or two previous candles. But think about a situation like this, the 27th of July and the 28th of July. 28th of July is the perfect example because you see how sharply it has fallen and then how sharply it has risen back. It has given you the shape of a V. I can draw a trend line and we can sort of see what's happening here and then from here till here. So as an intraday trader, you have to catch this move. You just have to. If we go to the 5-minute chart and let's scroll all the way back to where the trend lines are drawn, you see there's this big candle. It doesn't even give you time to enter because it's so large. You would be entering when the market is sort of settling down somewhere here. You see, the other problem is if you buy a put option, it would go down, come back up, and the option decays. If you short a future, yes, you would make good money till here. So this is the psychology of an intraday trader. You have to catch these bars. You have to catch 5 or 6 bars like this. And here, when the market is reversing, you have to exit this trade and flip the trade somewhere here or here to a long trade and manage the positions on both sides. If you have this skill, if you can develop this thought process, if you can develop emotional control, if you can manage your risk properly, is when you can think of becoming an intraday trader. This is how intraday traders make a lot of money, but there are barely less than 1% traders actually doing this strategy because it's extremely risky. What if your internet goes off? What if you don't put the order correctly? What if you're disturbed during your trades? What if there is an issue? There are a lot of things happening here and you have to be extremely sure of managing all these issues along with your trades. You do not have time to shortlist options. You do not have time to look at the strike price. You do not have time to attend phone calls. So if this works for you, if the psychology works for you, then you can look at intraday trading. Thanks a lot, guys, and I will see you in the next video. Thanks.